This is the daily chart on Teledoc, and after being range bound for the better half of the last 4 weeks, price gap down on earnings. Needless to say, earnings weren't stellar, but the real question is Cathie Woods going to buy more shares? Now, Cathie Woods currently owns 20 million shares, valued at 354 million, representing 3% of her portfolio. And since 2021, she's added roughly 10 million shares. So she's been catching the falling knife all the way down to sub $20. It's worth noting she's the 11th largest holder of the stock, in which she owns roughly 12% of all the outstanding Teledoc's shares. So let's get into the earnings before we continue with the analysis. So they lowered their guidance for the full year. Again, the stock gapped down. Pre-market on Wednesday opened lower to close higher, but now we see the shares moving down. Company reported a loss per share of 35 cents on revenue of 660 million, which compares to the expected loss of 37 cents on sales of 664 million. So they beat the estimates. However, it's all about the forward guidance. For the full year, revenue is now expected to fall within the range of 2.6 to 2.63 billion, compared to the prior range of 2.6 to 2.68 billion. All right, so the analysts at D.A. Davidson reiterated a buy at a $22 share price target. They say the following: the company is doing a good job of reorienting towards greater efficiencies and is now undertaking a comprehensive operational review to further those efforts, but likely needs to show more stability in its revenue lines to drive investors to become more positive. We remain positive on the stock given the margin profile, but await more details on what actions management is taking. Analysts at Oppenheimer's had the following to say: we believe Teledoc continues to take the necessary steps to drive margins and capture market share in a more competitive environment due to its attractive valuation. We continue to favor Teledoc for long-term investors. So short-term bearish, longer-term bullish. Why? Well, scrolling up to the monthly chart, you can see shares are trading below the IPO price of roughly $30. Can price move down further? Definitely. But again, longer term, they're bullish. Why? Because price was once at nearly $300. All right, so let's see if we can find some levels of interest for buyers. We're going to scroll down to the weekly chart. All right, so you see this mess here at 15, let's say 15 even. Got wicks, support, resistance, support, support. Just want to go down further. You have the W pattern here. You have above average volume on this candle here. So I like this W pattern. Then you have the rally, base and candles in the rally. Price tried to come back several times but couldn't. So we're going to say $13 will be the magic level. Just scrolling up to the weekly chart. $13. Okay, you can see the wicks, buying wicks right above that level. So the question again is Cathie Wood going to buy more now or wait till it goes lower? It will go lower before it goes higher. I agree with the short-term target at 22.50. You had support, which is now should serve as resistance. Thanks for watching. Subscribe. Please like the video.